Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend all. Ira Epstein of Linn & Associates with your weekend update for your metals markets. And this is Friday, the 14th of July, 2017. It's about just after 2:30 p.m., so we've got another hour and a half, but we already know that the gold close is in place, and you're not going to get big movements on it, most likely, into the end of the day. Plus, we do a different version of our analysis for the weekends. We do the weekly and monthly charts. We look at the longer term picture, and then I go right back on Mondays for the shorter term. I have a favor to ask of everybody. Please tell your friends about watching these videos and let them know how to do it from you. That helps our viewership, helps this go up, and maybe you believe it enough where they should take a look at it. In looking at the metals, gold, nice rally today, up $10, silver up 26 cents. In fact, you got a rally on everything. And the reason for the rally is the weakness in the dollar and the fact that when we saw the government data come out on the CPI, you're not seeing the inflation. If anything, it got weaker. Not stronger inflation, a tad weaker. That has the market concerned about inflation. That doesn't mean the market's concerned about adding to stocks, which are at new all-time highs in the Dow. It doesn't mean that the market's worried about interest rates a lot. The market's just sort of sitting. Now remember, we also have on the interest rate plays coming up now, we're going to get the European Central Bank's going to have their meeting. Nothing's expected there. We've got Chair Yellen going to be hosting different things. We have, as you know, the Jackson Hole meeting coming up where the central bankers will talk. So you got to keep your eye on that. But overall, the problem's the same in America that it is in Europe. And that's that they keep knocking down their unemployment there. We're at, I think, full unemployment, and we have no wage inflation. Technology, probably a large part of why that is the event. As you look at the gold chart, we can see the 1254 on the monthly bar has the 18-month moving average of closes at 1254. The chart pattern is not a trend. What it is, you've got higher highs and a lower low. If you'll notice the dark black lines, they're called Bollinger Bands, and Bollinger Bands are an algorithm designed to keep the market trading within them. Now, it's nice when they go sideways for a while because what happens is the market builds, be it a base or a top that it's going to work from. Eventually it breaks out of that, and instead of sideways action, you get the bands acting like this. You're not there. What the bands are doing is because it's a monthly chart, they're very, remember, it's like watching a turtle on the monthly chart. They're very slowly coming in together. What we do know is you got two layers of resistance in the market. One is the 1254 level, the 18-month average. The other is the 100-month average, 1321. The last rally high was around 1295.20. That's going to be a goal the market has to get through if it's going to set up anything bullish. What about bearish? Well, if it were to just fall here, it's still not in a trend because you got the higher high and lower low. You do have downside bias in two elements, though. You've got the slow stochastics, which are a momentum index pointing down, and you're under the 18-month moving average of closes. When we go to the weekly area chart of closes, your low close was made this week at 1209.70. So we've had an approximate, $88, $89 break in the market, and the market's gotten a little bounce today off of that for the week, up about $18. When we go to just a plain bar chart, one of the things that I said last time, I think I said it, I'm going to say it this time. You seem to be caught near this 1204 level right in through here and 1295. That seems to be the trading zone. When you put the swing line study on it, which is a study I developed so that I could easily see is a market trending or not, it's not trending. You have a pattern of a lower low than this low and a higher high than that high. A trend has higher highs and higher lows or lower highs and lower lows. You don't have that. The support came in at the 100-week moving average of closes, and as you can see, it's done a nice job previously of that. Yes, you closed under it last week and right back over it today. If the market wants to rally to resistance, that resistance is 1251 and a fraction. In terms of the weekly Bollinger Bands, you fell right down to the lower Bollinger Band and you're turning up. Just the way that you got to the top band up here, and think how many weeks ago that is. That's 2 months ago, fell back from there. So in the theory that I have that you're in sideways action, I'm about to stay with that for the longer term charts. In momentum, you're in an oversold area. Any reading that gets underneath 30, in my opinion, is oversold. So you're in an oversold area that still has downside momentum to it. I mentioned that before. You've got downside bias because you're under the 18-week moving average of closes and no trend, a sideways market. In the silver market, you've had a pattern that is bearish. Lower highs, lower lows. Now, you've hit your objectives. Bollinger Bands, whether they're on a weekly chart, a monthly chart, daily chart, they work the same way on all three. I can make arguments about slow stochastics that it works better on shorter term charts like daily charts or even interim charts, like I use pivot points with slow stochastics, and I'll talk about that at the end of this, give you an idea of that. But here's the market, and it's getting into that oversold area and getting a bounce. But it's got two levels of resistance. It's got the 1667 level and then the 1708. In order to negate the downtrend, you have to take out 1686. So all that you are is oversold, but you're in a downtrend. The copper market, on the other hand, is in an uptrend. You've got higher lows, higher highs. Like the other gold chart that I showed you, look at how sideways this action is in the Bollinger Bands. So if the market's going to fail, and that's an if, this is the area it should fail from. I am not looking for the failure. The market's in an uptrend, upside bias, and momentum, while overbought, is still pointing forward. It's different than the market flattening out the momentum in silver. And notice how silver pushed the Bollinger Band down right there. This is a very different looking chart with just sideways action. In the platinum market, you're bouncing against the lower Bollinger Band, and you do not have a swing line trend. You again have a pattern of a higher high and a lower low. Momentum is down, oversold, and bias is down. Nothing friendly on that chart. The palladium chart has still got upside bias, but flat momentum, just totally flat there. Is the market trending? It is not. You have a higher high and a lower low. So you have a very mixed picture other than copper, which has got most of the bullishness going for it. In the dollar index, the momentum is locked in bearish. You are under 20, that's locked in bearish momentum on both numbers. You're in a bear trend, lower highs, lower lows, and the dollar index made a contract low today. In other words, for the whole period of the September contract, I think it's an 18-month low, the market made new lows. So the dollar remains weak, which is one of our president's goals in the market. You know, I talked about pivot points. Let me explain what a pivot point is, because I don't show them in this. Let's assume you want to be an in-and-out trader. You're looking to buy during the day, ideally be out by the end of the day. What if you can buy these low lines that I showed and sell out at a higher line? What if you sell a higher line trying to buy back at the lower lines? That's what a pivot point is. Now, it's very popular in FX trading. I use what's called the 5-point system. You got a center line, 2 sell numbers above, 2 buy numbers below. I teach you the formula. It's very simple and it's universal formula, so I don't think I have anything unique there. I tell you how to apply it, so you get 2 videos. And the videos show you, number 1, how to work with the formula, how to plot it and set it up on your chart, how the points are arrived at. Then I take you to a real chart, and that I do that all with, by the way, PowerPoints there. Then I take you to real charts and give you an example. I have decided that for those of you that get these 2 videos, I'm going to create a 3rd one even to show you how to take the slow stochastic oscillator and work with the pivot points. I'll get that done probably in August to complete the pivot point series. Then I'm moving on. I've already done the MACD series. Others are coming forth because I believe that the key to trading is knowledge. Doesn't mean I can make you a worse trader or a better trader. I just believe the key is knowledge, and if you learn enough, you can play with it. So how do you get our two-part video series? It's really easy. You can call my staff at 866-973-2077. You can go to our website at www.iraepstein.com. You can click up here if you're watching me on YouTube. You're going to see that icon. Click on it. The forms will appear there. And or on some websites, they carry these videos in their own manner, and it'll say, click here for Ira's free information under them. With that, I'm Ira Epstein. You have a great weekend, and I'll see you all Monday.